Welcome to the PCMA's first ever webinar on the new Fintech Platforms for private capital markets. My name is Karen Fournier and I'm going to be your moderator today. On behalf of PCMA Chair Doug Bédard, I would like to thank everyone on the line today for joining us for this new webinar series. Today's session will focus on how dealers can benefit from working with new Fintech platforms. The presentation will be divided into two sections. In the first half, we will hear from the Funding Portal, a venture-backed initiative financed by investors as a new service to the capital markets industry here in Canada. Speaking on behalf of the portal will be its president and CEO, Teri Kirk. Teri is an experienced lawyer, telecom executive, and entrepreneur who founded the Funding Portal as a means to help businesses and dealers access government funding and private financing. She is also a director on the board of the PCMA. Next, we'll be hearing from TSX Private Markets about its new platform built by Canada's leading stock exchange. Peter Conroy, co-managing director, TSX Private Markets, will be representing TSX during the presentation today. Peter worked in the financial services industry since the mid-1990s, starting at Dow Jones Telerate and co-founding Canada's first registered alternative trading system. Peter is currently president of the TMX Group's fixed income interdealer broker, Shorcan Brokers Limited. Now, before moving on with the presentation, we have a few housekeeping items to cover. Firstly, a copy of the Funding Portal slides will be available on the PCMA website in the coming days. It would also be possible to obtain more information on TMX's presentation by contacting them after the presentation. Please note that your lines will be muted during today's call. However, we encourage you to ask questions using the online interface at any time during the presentation. We will be taking questions after the Funding Portal's presentation around 12:30 and at the end of the webinar. Pour ceux d'entre vous qui parlent français, j'aimerais vous informer que la présentation se déroulera en anglais aujourd'hui. Cependant, vous pouvez toujours nous écrire vos questions ou nous demander des renseignements supplémentaires en français. Now let's move forward with the webinar. I'm pleased to introduce our first speaker today, the Funding Portal's Teri Kirk. Teri, you can go ahead.
Thank you so much, Karen. Really appreciate it. Welcome to PCMA members and their guests on the line. What we're going to cover off today is access to a bit of a mysterious financing market we call the business incentives financing market, otherwise known often as government grants, contribution tax credits, R&D tax credits, and so on. Most of you are reasonably familiar with it, but I'm sure you find it a bit of a irrational financing marketplace. So one of the goals of the Funding Portal is to make what is a $30 billion a year in Canada alone financing marketplace more accessible to dealers and their issuer clients. And the Funding Portal is itself an exempt market dealer, which enables us to work with the dealer community in leveraging successes in business incentive markets into both debt and capital markets. Let's start then at slide 5. It's on your screen, government funding incentives for your clients. And the main point here at our next slide, we generate something called the Funding Portal Top 500. And the point is really to indicate that this is a fairly significant financing market. And often people think of grants in particular as little bits of money for startups, and there's certainly lots of that goes around, but this is really kind of a small, medium, and large cap financing marketplace. There are at least 100 companies, what we call our top 100 of applicants for business incentives that get $8.8 million on average per year. Government tends to put in about a third to a half of a project. We often say they don't fund companies, they fund projects. So companies bring forward winning projects to which governments will often contribute a third to a half of the project financing needs if there's some compelling aspect to the project. And so if government's contributing 8.8, we'll call it $9 million. That's typically a kind of 18 to $20 million project. Within kind of the darling sectors in our economy, such as clean tech and ICT, the average check written by government to clean tech companies for projects was $1.46 million, $1.5 million last year. So that would be typically on a $3 to $5 million financing project. Let's turn then to looking at a couple of sectors. This money tends to flow, as you can imagine, by region, by sector, by activity set. So within we all know the resources sector well on the call, I'm sure. And so looking at money that flows from federal and provincial government programs to that particular sector, we used our search tools and identified 38 separate programs that are targeted just at that sector. This comes as a shock to most of us, including me, frankly. I'm constantly surprised by how many programs and how much money there is. Typically, even people within the sector would know about 2 to 3 programs. There are 38. There are also another 500 programs that are not targeted at the mining sector, but are open to the mining sector to support activities that miners, like other companies, tend to participate in, which is innovation, commercialization, CapEx, exporting, staffing, etc. So a total of 538 programs available to that particular sector. The next slide provides some examples of companies that recently did get financed in this business incentives marketplace. Orbite, $14 million out of government of Quebec's Canada Economic Development Program. You see them there on your screen. RP Energy, Canada Lithium Corp, getting 6.5 out of SDTC, which funds the third, so that would be the $20 million financing, of which just under 7 came in through a federal government program aimed at the clean tech sector. A mining company doing clean tech work. Looking at to the far right, Mindset's getting $5 million, again out of SDTC. Maybe another one, Zenyatta, some of you may know. A small company getting $350K. Not too bad for a startup. Typically would have been matched by an angel who had put in another $350K for a total of $700 financing in the door to kickstart a promise. These financing instruments, which are distinct from the instruments we use in the private sector, which are debt and equity, broadly speaking, governments use neither. As a general rule, they use tax incentives, credits, flowing to companies after they've raised capital, spend capital, and claim it back through our tax system, which is a significant instrument, makes up about $5 billion of the $30 billion that government dispersed here. The other $25 billion goes out the door in the form of grants, which is non-dilutive, non-repayable money, the best sort of money you can possibly get. These programs are announced through budgets, so we watch the budget very, very carefully, federal and provincial, and see trend lines and new programs announced. The good news is, unless we're wearing our taxpayer hats, these programs are very seldom dismantled, and net new programs are introduced all the time. We saw with the election of the Trudeau government that a new instrument for communicating these 6 programs now exists, the Minister's Mandate Letters, which were published in advance of the speech from Rome, and we saw tremendous focus on new funds, new programs, new grants for target areas of the economy.
We'll be hearing from TSX Private Markets about its new platform built by Canada's leading stock exchange. Peter Conroy, Co-Managing Director, TSX Private Markets, will be representing TSX during the presentation today. Peter worked in the financial services industry since the mid-1990s, starting at Dow Jones Telerate and co-founding Canada's first registered alternative trading system. Peter is currently president of the TMX Group's fixed income.
Let's turn then. I think what we've done in part 1 is introduced you to really the size and the scope of the incentives financing market. The funding portal has launched into U.S. markets last summer, and I can tell you there's another $180 billion in federal and state incentives, some of which are available to Canadian companies operating on the U.S. side. Certainly interesting for companies who have entry ambitions into the U.S. to understand the different incentives that exist for them. If they're dairy farmers, or tech companies on a state-by-state basis, what kinds of incentives exist So how do we open up this marketplace for dealers and their clients? A quick overview of the funding portal. Our mandate is get funded. So we exist to help companies get funded. We often say we're Expedia, business financing markets. We're not hotels.com, which provides one part of your travel experience, but truly is kind of Expedia for business funding markets, really working with companies to identify optimal sources of funding depending on their stage, their sector, their objectives, and we're able to, on a very unique basis now within Canada, help them into that $30 billion a year business financing market, and business incentives, and in both Canada and the U.S. as an exempt market dealer into capital markets. We do that through partnerships. It's difficult, as you can imagine, to purport to be an online EMD as well as doing the other things that we do. So our two-market strategy within capital markets is to work with other dealers, as you know, we still have KYC obligations in making referrals, and so we've identified a number of partners that can help us serve our full range of kind of company intake that we do very well. We have 17,000 companies now using the funding portal every month to try and get funded, and we push a lot of that work, certainly in capital markets, out to our target fulfillment partners under referral fees and client sharing arrangements. Let's then turn to our next slide, where we highlight, again, being a kind of an Expedia or Fintech platform, we try and use color coding and big words and simple concepts to guide companies, as we all know, through what is, in fact, a complex process to get from I'm looking for funding for my company to, hey, I got funded. So we've divided that world into two tracks. We call it our green track into government funding and our blue track into private financing. On the government funding, we're helping companies into the two financing instruments that exist within that market, grants and tax credits. And on the private financing, we're helping them into debt and equity. I must say, on the debt side, there's some fabulous new debt funds that are opening up. One that we're now partnering with, specifically designed to bridge companies through to the receipt of government funding, so it works very well for us to get that $2.5 million approval from SETC. It may unfold over the next year to year and a half, which is slow for companies. There are now debt instruments that will securitize those government commitments and flow the money that's required in advance, as well as we know, more innovative debt funding now for ICT companies that tend not to have traditional security assets. And of course, the capital markets, many ask us, are you into crowdfunding? We are not doing crowdfunding directly ourselves. We find it a micro-cap market, hard to make money in, frankly, but we appreciate those who are tackling that activity set, and we will welcome layering on a crowdfunding partner onto the portal under our kind of Expedia one-window business model, but our primary focus is small to mid-cap markets, accredited investors, and incentives and debt instruments that are more in that, I would say, $100,000 to $30 million, broadly speaking, but kind of sweet spots in the $3 to $20 million range. We use a three-step process to guide companies through that process from, hey, I'm looking for money for my company, to, hey, I got funded. We call these three steps, like here I'm at just show our three steps: find it, apply for it, and leverage it. The picture on the screen demonstrates how we use a combination of advanced mobile computing technologies and good old-fashioned human intelligence. And it's our belief that it's the optimization of those two types of, let's call it, technologies that are required to really help companies get funded. One simply can't do it all through web-based tools, and instruments, financing instruments, which are distinct from the instruments we use in the private sector, which are debt and equity. Broadly speaking, governments use neither. As a general rule, they use tax incentives, credits, flowing to companies after they've raised capital, spend capital, and claim it back through our tax system, which is a significant instrument, makes up about $5 billion of the $30 billion that governments disperse each year. The other $25 billion goes out the door in the form of grants, which is non-dilutive, non-repayable money, the best sort of money you can possibly get. So these programs are announced through budgets, so we watch the budget very, very carefully, federal and provincial, and see trend lines and new programs announced. The good news is, unless we're wearing our taxpayer hats, these programs are very seldom dismantled, and net new programs are introduced all the time. We saw with the election of the Trudeau government that a new instrument for communicating these six programs now exists, the Minister's Mandate Letters, which were published in advance of speech from, and we saw tremendous focus on new funds, new programs, new grants for target areas of the economy. The next slide. Our hope is, of course, that people will then engage the portal for value-added services, and those services include, at step one, our funding sources reports, a comprehensive workup on all the incentives that exist for your client's company. We use something called Funding Portal IQ, a new predictive tool that will not only tell companies what are the best possible source of funding, but how much this company would expect to get under that particular program, using evidence-backed information about what that source of funding has in fact flowed into the market for those types of projects. We include in that a consultation so that companies can have a report and a chance to answer all those questions. When we're working for an EMD, we're able to private label our report, so it becomes your dealer's report to your clients. You become our client, we become your back office service provider. We generate a custom private labeled report for you to put in front of your client within 5 business days. At step two, we help companies to actually get this money, writing their grants, leveraging them into debt and capital markets partners. And our step three is really just a chance to say to companies that this is not a one-step process, but one that you will have to, repeat and leverage successes into bigger and larger amounts. We do provide, we have a sister corporation, shall we call it, center block, where companies are looking for very large and strategic amounts out of governments that additional advocacy work may be appropriate. I will finish up with one last image of some of our, really smart tools which represent unique proprietary R&D work carried out by the Funding Portal. Our search tool, which opens up 15,000 now sources of funding that we can match, incentives, angels, high worth, VCs, debt funding for your company. Our analytics allowing us to predict how much you can get from these sources. Our funding sources reports in our networking tool, which I hope all of you will do when you get off the call. We like to say it's the Facebook or LinkedIn for capital markets. It's our MyFundCard networking tool. We've got 32,000 now issuers, investors, high worth, able to generate matches using that tool. Karen, I know I've probably gone 1 minute late, but and maybe we'll hold any questions to the end, and over to Peter, I'm sure.
Hi, Teri, how are you?
Great, thanks, Peter. Welcome aboard.
Well, thanks for having me. Thank everyone for joining in. If we could turn to slide 3, it's kind of a little bit of a fun slide. There's some acronyms that you might know of. My children, I have twins, 15-year-old daughters and a 11-year-old son, and they were making fun of me recently because there's a lot of acronyms that I didn't know. The ones on the left here, ROI, we all know B2B. examples of the Norwalk Club membership: Avalon, Shopify, Hootsuite, and Slack. Slide 8. Here's some emerging Norwalks according to eHub, FreshBooks, Desire to Learn, which many of us have heard of, Wattpad, social marketplace writers and readers, Real Matters, intelligence provider to real estate, and Critical, we've heard of Build Direct, most heard, IQmetric, provides retail management solution, ED Wave System, quantum computing. There's some public companies too, as the Blade Mogo, Redknee, and coming soon to the TSX, Point Click Care, software company, just on senior deliveries. If we go to the next slide, slide 9, investment in Canada. Canada's largest pension, CPP, currently has roughly $90 billion invested in private alternative strategy, representing 40% of its portfolio. Teachers has invested roughly $70 billion, almost half of it, net total portfolio. And Almer's $40 billion, 40% of its total portfolio. If we click to slide 10, you'll see Teri Almer's venture capital market arm taps systems and BMO. So this is a recent headline, Wall Street Journal, where BMO, Cisco, and Almer's have come together to have fun investment in private, building on the success story that they had of making such a shock. They went public in May. Click to slide 11. Raising capital in Canada. What is the size of the exempt market in Canada? Well, 150 billion was raised in the Canadian exempt market in 2012, and it's growing at roughly 51 of that 100 billion raised by TSX and TSV issuers in the exempt market, and there were 5 billion was that year. 3 of the world's most active startup ecosystems are here in Canada. 2013 ranking, Toronto was number 8, Vancouver number 9, and Kitchener-Waterloo number 16. I had the privilege of being in Kitchener-Waterloo last event, which was very well attended, over 1,000 people. Something interesting, there are over 1,800 startups in what they call the technology bank of Kitchener-Waterloo in Canada. So if we click another slide, you'll see some recent headlines as well. Desire to Learn educational software valued over $1 billion, 200 million users for $70 million in U.S. ventures capital today. ClearPath Robotics raised $11 million. Shoes.com expected to go public later this year. Your Mission Critical, customer intelligence software backed by several PC funds expected to go public. There are over 1 million private companies in Canada, and you compare that to 4,000 public companies. Now, not all 1 million private companies invest in private markets, you're insulated from stock market performance, macroeconomics, geopolitical events at moment's notice. You get access to CEOs. A lot of companies took the CEOs like to invest into private companies because there's no selective disclosure rules. They can access those CEOs. You invest $10 million into a private development. You don't want to see. You're going to get the information you want. For companies, they get access to patient money. They get the ability to stay private longer while accessing growth capital, not necessarily VC. There's pre-IPO price liquidity. There are challenges. There's price discovery and transparency. Lack of analysis on a market product. Minimal awareness and understanding. And the need for standardized, centralized reporting, aggregating data. So if we click again, here's kind of the landscape in North America. The exchange group's getting this. The funding portal up there, shares goes to ECN, Canadian, OCMX, that NYSE and ACE, and that private market, that second market. So the space is getting crowded. What's happening here is the sheer existence of these platforms, tech platforms, allows companies to stay private longer so that that technology company in Waterloo is making, the programmer making $40,000 a year and a whole bunch of options. Well, because of the existence of these facilities and access to potential liquidity pre-IPO, these companies can mature and grow and stay private longer and then IPO. So just flip to slide 16. This really talks about TSX Private Markets. What our model is, very simply, it's a dealer-to-dealer model. So only IROC firms and exempt market dealers, so registrant, access the platform. Once you access the platform, you can do two things. You can raise capital on behalf of a company, or you can trade in the secondary market, exempt market securities. And exempt market securities is a whole other topic of conversation. It can include 4-month paper of a public company, or it can include a capital raise on a private company with a secondary trading of a private oil and gas company free. So very, very important. Accredited investors do not access the platform. They must go through a dealer to execute. Company must raise money on the platform. They must nominate the dealer to work with that dealer to post on the platform. Where we are today, slide 17, there's over 50 participants, over 680, I think we're well over 700 now, registered users. There's 31 products trading, 10 TSX trading products, and there's 3 actually updated. There's now 4 investment opportunities totaling $35 million being raised on the platform right now. Slide 18, we've really gone through the benefits to registered dealers, liquidity for investors, price for volume, transparency, opportunity to sponsor for everybody. And slide 19, just wrapping up, to counter the fear of missing out on the benefits, there are great investment opportunities on the platform and in the exempt market. The reason that the TMX has got into this is to know these Canadian companies earlier on in their formation, earlier on in their evolution, work with them to get their DS eligibility so that we can settle these trades with, work with them in our transfer, equity transfer for their shareholder needs. And product and the platform will continue to evolve, and we look forward to getting all your feedback and getting you signed up. So with them, maybe we'll turn it over to some questions.
Perfect. Thank you so much, Peter, and thank you, Teri. We're a few minutes before schedule, so that's good. We're going to have a lot of questions. Please feel free to type in your questions. Go to the online. Teri, the first question is for you. How does funding portal help trends to know their products, so the KYP requirement? Right. So as a fintech platform, we try to do everything possible. Certainly, we like to say if we do it more than twice, we create an automated process for doing it, and that certainly is a competitive process. So on the KYC, we have captured data intake from our clients. We captured 21 initial data points on the client when they register for our services, and we layer on additional data points as we move the client along the capitalizing continuum, shall we say. Our products, of course, are incentives, debt instruments, and capital market solutions. And as I say, we are up to 15,000 of those loaded into our fund card product description. And so we generate a match. We have 21 data points about each one of those 15,000 products that we are updating daily, and 21 data points about our issuers, or sometimes we call them applicants, if they're applying into markets, into incentives. So we basically generate a match. It's often, really why we say we're kind of Expedia of business financing markets, matching issuers to investors, borrowers to lenders, applicants to funders across 21 data points. Those are obvious data points. We like to think that we've put a dealer reps, captured their thinking through kind of data capture and matching algorithms. So they are the obvious details like region, sector, amount, revenues, earnings, activity sets, so on to generate those matches. So that's how we're doing that. I'm pleased to say that we've been registered by regulators across Alberta using our online tools to perform QIC, QIP, and suitability tests. Thank you, Teri. The next question is for Peter. Towards the end of your presentation, you mentioned that the people listening in on the webinar can sign up to join your program. What's the best way for them to do that?
The best way to do it is to go to TSX Private Markets, register there. Someone will.
Okay, sounds good. So hopefully everybody will write that down, but I'll make sure to email that as well. Teri, next question is for you. How can dealers work with the funding portal, and is there a path for revenue? Yes, there absolutely is. We're all about making money, or we wouldn't be dealers, or building Fintech Platforms. So, number one, we welcome relationships with dealers, much like Peter has said. We really are a dealer-to-dealer platform. We, differ from typical EFDs in that we are really trying to help companies get as much of that non-dilutive, often called free money, out of governments as possible. We think it's a great sweetener for companies. It performs a kind of outsourced due diligence to a certain extent. Companies then come into capital markets cashed up, having won largely competitive processes for their technology, etc. If they're looking for $5 million total, to get $2 to $3 million as kind of non-dilutive, non-repayable money. That's good for everyone. So we have identified a few dealers. We welcome more. I hope I'll get lots of phone calls after this session. And again, we try and triage the market. We have kind of 5 different debt partners right now, starting with OnDeck, the world's largest online lender now. We have a formal partnership with them, and companies that are good clients for OnDeck, we make referrals, and we get a percentage of the loan for any referrals we make in the capital markets. Again, we're trying to cover the whole market. If you're specialized in resource equity, private equity deals in British Columbia, we'd love to hear from you. So when we have clients who are a good fit for your dealership, we can make those referrals, and we enter into splits that are appropriate, that we're able to negotiate. That's really it. Thank you. Perfect. Great. Okay, maybe this next question is addressed by both first. Everybody's really interested in what's going on with the crowdfunding that OSC has a new model and regulations. So what are your thoughts on the market, and is that something that TSX and the portal is looking at doing?
Well, obviously we've taken an eye on the space of funding. It's not something that we're actively
mind just repeating it? I think Peter answered it very thoroughly. I would really just say ditto to Peter. I think we feel the same. God bless anyone who can get out there and build a crowdfunding platform. And, it's a lot of equity transactions to feel responsible for relatively micro markets. So we're letting braver souls take that on. Our focus is on slightly larger deal sizes, more in the accredited investor exempt space. Yeah.
And that's good. So I think we have time for one last question. Teri, it's for you. What are your fees on the capital market service side?
Yeah, we try to be, as a portal, pretty much at market rates. We're not out there to undermine or bring down. We know it's hard to make money as an exempt market dealer these days, so the last thing we want to do is play any kind of role in lowering rates. We tend to match. Sometimes we feel we have to be a bit more competitive as a portal. People are looking for that. Our cost structure is also, of course, lower. We work online and have very limited infrastructure costs. So we're doing a kind of classic 6 and 6 and 8 and 8 like everybody else, and then working on fees, but depending on the allocation. Generally speaking, our role is client capture. We do that extremely well. I often kind of call ourselves, that Pac-Man of capital markets. We're capturing, as I say, about 17,000 companies a month coming to the portal looking for our help in getting them funded. And our job is to get them out in front of the best possible service provider as quickly as possible while making money ourselves for doing that upfront work.
Thank you so much, Teri, and thank you, Peter, as well. That completes today's presentation. On behalf of Doug Bédard from PCMA and the association itself, thank you everyone for joining us for this webinar series.